13 stocks that are great buys right now. That's what we're about to get into in this video here today, folks. We're only going to get to the tip of the iceberg in regards to these 13 stocks, and the reason being, well, it's 13 stocks. So if I went super in depth on all 13 of these, I think it would be like a 3-hour long video. So some of you guys might be into a 3-hour long stock video, but not everybody's into that. So we're only going to get to the tip of the iceberg in regards to these. I'm going to probably spend 2 to 4 minutes on each of these stocks and kind of talking about why I think they're great buys right now, okay? Now, if you know the number one saying in my little flippin' flapjacker resort over here, build a portfolio you'll be proud of years from now. And it's not just in terms of thinking about what type of stocks you want to be in and great quality companies, those sorts of things, but it's also in terms of kind of, you know, when the market gets a little, let's call it shaky, people start thinking they can time the market. Oh, I'm not going to buy right now. I'm going to wait 2 months. I can get it lower. Oh, 2 years. Oh, 2 days from now, 2 weeks, whatever. Okay. The bottom line is these stocks are all buys right now. Could they go lower? Sure. But you could say that for any time period ever in the market. They can always go lower. Always remember that, okay? Appreciate you guys joining me as always. Thanks so much for being here. All I ask in return, smash a like for this video. It's taken me quite a bit of time to put this beast here together for you guys, and all I ask in return is for you to smash that like button. If you enjoy my videos, make sure you're subscribed to the channel and have notifications on if you want to be notified every time I come out with a new video by YouTube, okay? Alrighty, so first one of these 13 is name is Tesla, Tesla stock. We call this Mr. Worst Sentiment since 2018. The stock is down 40% year to date. We're in the 4th month of the year. So at this point, it'll be a 0 by the end of the year. I mean, geez, oh, Louisa, it's insane, right? Worst sentiment I have seen in the stock since 2018. I've been a shareholder of this company for a long time, right? And I will say it's been a roller coaster ride. You got a divergence of even investors out there. You got, if people have bought this stock in the last 3 years, they probably have very little positive things to say about it, right? Because they're probably down in their shares if you bought in the past 3 years. However, if you bought in the past 5 years, 6 years, 7 years, 8 years, 10 years, you're doing phenomenal in the stock. You probably have a lot of very good things to say. So we have a divergence between the people that have made fortunes of money in Tesla. And remember, I hold a very small amount of Tesla shares compared to what I held, you know, let's call it a few years ago, which now I'm starting to add those Tesla shares back slowly but surely. But, you know, Tesla changed my life. I don't know whether the way to put it. You know, I call my house, the one I live in, the house that Tesla built. And I call it that for a reason, because it is the house that Tesla built. It changed the game for me, right? Now, here's the deal, okay? Here's the flippin' flapjacking deal on Tesla. The stock is up about 700% in the past 5 years. About 700%. The stock is up about 11,000% since IPO, right? Now, during this 11,000% gain since IPO, we had about a 5-year period of sideways chop with this stock, where the stock went nowhere from about kind of 2014, 2015, all the way through 2019, did nothing. You could pull it up over that time period, did nothing. It went up, it went down, it went all around, but it did nothing. It's had countless major crashes of 20% plus in a matter of 6 months. A real crash in a stock is any time a stock goes down over 20%, and it happens in less than a 6-month span. The amount of times Tesla's done that is, it's hard to count them all. It's so many, it's ridiculous. This kind of looks flat because the stock's gone up so much, but there's so many crashes in here, it's insane. And also, the stock is down huge the past 3 years. So there's something to kind of keep in mind in regards to that one. And despite all that, the stock's still, you know, a 10,000+% gainer since IPO. Incredible. Now, you got to differentiate between what's going on, the trend long-term with this stock versus the short-term, right? This is a trend, folks. What transpired from 2013 to 2023, that's a trend. Going from $2 billion of revenue to nearly $97 billion of revenue, that's a trend. What's going on in the very short term is not a trend, right? Interest rates go up massively, it's going to hurt big ticket purchases. Look at how many homes are being sold. I mean, right now, you're going to understand, right now we're going through an interesting phenomenon. Right now in the United States of America, there's around the same amount of homes being sold as in the depths of the great financial crisis. That's right now, okay? So big ticket purchases are not doing well. Look at a company like RH's numbers. RH, Restoration Hardware, furniture company, and they even sell to the wealthy, right? The top 10% of income earners. Their numbers are the worst they've been posting in years and years and years. Big ticket purchases are not in a good place. And you'll see that play out in all the automakers' numbers over this next year as well. All Tesla's competition or whatever you want to call it, okay? And so we're going through an interesting short-term phenomenon that is what it is, But what happens in the short term is not a long-term trend, okay? This is a trend. This is number of vehicles Tesla delivered, okay, from 95,000 to 1.8 million. That's a trend. This, whatever happens in 2024, is not a trend. That's a short-term hiccup, whatever you want to call it, okay? Now, next argument that could be made against Tesla is it's so expensive. Look at the forward P. Well, keep in mind, first off, they could eat that forward P up very, very quickly starting in 2025 and beyond as a company increases profitability quite dramatically and they get their revenue growth going back in the right direction, along with obviously the employee cuts. They are going to bring down expenses a ton here, and the price drops are likely done at this point in time. And if anything, they're going to start going up on price in the back half of this year. In my personal opinion, they've already actually started to go up on some price on some vehicles, okay? The second thing I'll say is, you know what else is expensive? Real estate in New York City. It's very, very expensive there. Why is it? Well, there aren't many New York cities out there, are there? And a lot of people want to be in New York City, okay? So when it comes to Tesla, there aren't just a bunch of Tesla stocks around. Tesla's a freak company. That's a freak opportunity, right? I'll show you another stock that's always been expensive. Its name is Amazon. Amazing Zon. It's a stock I hold. This stock, I wish I held it since it went IPO. Holy smokes. 146,000% gain. That's incredible. Amazon's always been expensive, okay? And you think Amazon's growth has been perfect? No. Let me show you Amazon's growth. It's been lumpy. Check this out. There's been time periods in Amazon's history where you could have made an argument that Amazon's done. It's Dunsky. It's Dunzo. Check this out, okay? Back in 2001, the company only grew their revenues 13%, an embarrassing 13%. This made it look like Amazon's growth was done because they came off a year and they grew 3,000%. Then they grew 838%. Then they grew 312%. Then they grew 168%. Then their growth went all the way down to 68%. Uh-oh, maybe we're topping here. And then the next year, 13% revenue growth. That's beyond embarrassing. This is supposed to be the future. This is supposed to be like this big thing. Oh my gosh, their growth is already over. What's next year going to be? 0%? Maybe their revenues are going to go negative in 2002, right? And look at that. $3 billion of revenue. And last year, Amazon did $574 billion of revenue. Oh, their growth wasn't done. It was just a short-term hiccup, right? Then in 2005, they went down to 22% growth after they had an acceleration, and then it was like, oh, major deceleration, maybe that's about it. $8.49 billion of revenue, right? Right here, 2014, they had been growing 20% plus a year for like, I mean, what is that, like 7-8 years straight? And then in 2014, they grew less than 20%. Another argument that could be made, oh boy, what's going on with Amazon? Look at how weak that growth is. 2022, 9% revenue growth. Amazon's done, right? Yeah. No, they weren't done. Any of these things that have happened over time were just short-term hiccups for Amazon. That's the situation with a Tesla. Number 2 of these 13 stocks, that is a buy now, it is Meta. The stock's performed tremendous. We all know that, right? It's done great. Ever since the lows of November of 2022, the stock's been nothing but an animal, and it's likely going to continue to be an animal, okay? So let me show you something very important on 1000xstocks.com, which, by the way, I just shouted that out. I think it was, yesterday for the first time? We already have over 100 people on the wait list for 1000xstocks.com. And I created this service as a way to just simplify and expedite the process of comparing stocks against each other, knowing all the metrics I need to know without having to go through a bunch of different websites to find this and find that and then calculate numbers and then to try to compare them against each other. It takes, this took me 5 seconds to type these tickers and compare stocks. If I would have done that same process and wrote it down or took screenshots, to get all those different metrics that I need, it would take me 30 minutes easily to do that. I did it in 5 seconds. So this is a tool. You can join the waitlist if you want, 1000xstocks.com. We're already 100 plus deep on there. But if you look, Meta beats all these companies on forward P. It's got a lower forward P than its competitors, if we want to call them that, right? Apple, Microsoft, which they're in different businesses, but since they're all big tech, they kind of get compared against each other. The only thing they lose against is trailing 12-month P, but we care more about the future. So forward P matters more than trailing 12-month P, which is why on my service I put forward P ahead of trailing 12-month P. Pay ratio, Meta's better. Gross margins, Meta's better by a lot. Net margins, Meta's almost the best. We can call it, around a tie with Mr. Softy there. And I actually do think Meta's net margins will exceed Microsoft this year, in my personal opinion. We'll see how all that trades out, right? And so it's got a cheaper valuation, but here's the phenomenal thing. It's also expected to have better revenue growth. If we look at current year expected revenue growth, we're looking at about 24% roughly for Meta. That's versus 4% for Apple, and we'll see if Apple even grows 4%. I think that's a question mark, but 4% for Apple, 17% for Microsoft. Next year expected revenue growth, 14% plus for Meta versus 5% for Apple next year, and 13% expected for Microsoft. Those are analyst expectations average, right? EPS growth far, far exceeding for Meta versus Apple and Microsoft expected EPS growth. So when I look at Meta versus the other competitors with their other big tech components, they're actually very undervalued. And I know the stock has been an animal, but there's really no reason for Meta to stop being an animal anytime soon. And don't be surprised if you see that stock pushing 600 plus very soon, and then we'll head to the 700s, okay? Next stock up here, number 3 of 13, is Nvidia. Now, the stock's up 218% in the past year, and it's still a buy. And Nvidia is a buy all the way until growth ends. Whenever this growth cycle we're in right now comes to an end, Nvidia stock will have a day of reckoning. But it's not right now, and it's probably no time soon. And we'll speak about that in just a moment. Here's the thing. Nvidia stock trades at about 37 forward P, based upon analyst estimates, right? But here's the deal. 37 forward PE, that's very low considering the growth this company has. And also remember, analysts have been wrong across the board in regards to Amazon's revenue growth and earnings per share growth and margins. So if anything, that number might actually be too high. It might actually be a far cheaper forward P when all is said and done. But here's the deal. Amazon is expected to grow revenues nearly 70% this year. 70%? And you're only having to pay 37 times forward P? That's cheap. Insanely cheap, okay? Now, in regards to chip cycle, we're in a major chip cycle for Nvidia. We're in year 1 of that chip cycle. Now, usually a major chip cycle for Nvidia lasts between 2 and 5 years. If it's a smaller chip cycle, it's about 2 years. If it's a major chip cycle, it's more of a 5-year situation. So in regards to Nvidia, we're in year 1 of a major chip cycle that my opinion's probably going to last between, I would push it more, because this is a major chip cycle, I would say probably more toward a 3 to 5 year chip cycle, and we just ended year 1. So we're going into year 2. So we probably have at least 1 more year, if not 3 more years, of this major chip cycle that we're in right now of upward pressure there. It's a very attractive stock still at this point in time. Number 4 of these 13 stocks is Fubo. We call Fubo Mr. Left and Dead. The streaming company is down 55% year to date. Interest rates went up. The new service was announced. Disney, Warner Brothers, all those guys partnering, and it just left this stock for dead. But here's the deal with Fubo's actual business model. Subscribers are growing very nicely. Revenue is growing very nicely. Gross margins are growing very nicely. Net margins are getting much better. And losses are coming down. Last time I checked, that's all very positive for your business model. When your subscribers are going up, your revenue is going up, your gross margins are getting better, your net margins are getting better, and your losses are coming down, those are great news for your business model. There's no reason this stock should be down 55% this year. It's absolute silliness. Now, there's a lawsuit situation, and obviously, people have sold out of the stock based upon that. There's only upside for Fubo in that. If they win the lawsuit, that's great for them. If they don't win the lawsuit, that's still upside because it pushes back and puts much more attention, in my opinion, on Disney and the other companies that own the rights to sports. And so I think it's going to be harder and harder for Disney and those other companies to charge Fubo insane rates. They've got politicians involved in that. And, sports is kind of seen as almost like a right to the people. And so, I think this sets up Fubo for a win-win situation in regards to lawsuit. So, yeah, Fubo, it's a steal deal. I mean, the company's priced for bankruptcy, just to be quite frank. When you're talking about dollar, you're priced for bankruptcy. Anything that's not that is going to result in absolutely incredible upside. And when I say upside, I'm talking about like a 10x type opportunity in a short amount of time, right? Next one up here, number 5 of these 13 stocks is Nike. We call Nike Mr. Easy Money. Yes, Mr. Easy Money. I've bought Nike consecutively now. So many weeks in a row. It's ridiculous. Okay, Nike's Mr. Easy Money. So news just broke that they actually signed Caitlin Clark, landing a $20 million plus signature shoe deal with Nike. So exciting for her. I think it might even be more exciting for Nike, though, because this woman is attracting so much attention. It's insane. Did you guys, and I know everybody follows sports, and I really don't care about college basketball, but it's incredible. Women's NCAA championship TV ratings crushed the men's competition. That was thought of as never, no way. It's impossible. It happened. An average of about 18.7 million viewers, average, tuned in to watch that game, that Final Four game between South Carolina and Iowa, which was a team she played for. What? This is insane. It's not only a sports glass ceiling that was crushed. Sunday's game was also the most watched basketball game, either men's or women's, and college or professional since 2019. Since 2019. Oh my gosh. So I don't know, Nike might have stole a deal here because this woman is attracting attention like we've never really seen. Absolutely incredible. Now, in regards to Nike, is a generational buying opportunity in the stock here recently. It's a freak situation. The stock's gone nowhere for 5 years. It's up a whole 12% in the past 5 years. When have you ever gotten Nike on a 5-year basis, for doing nothing? I mean, this is a generational opportunity here in Nike. And so, yeah, easy money. Give me the easy money. Next one's up here. This is actually 2 stocks. But we'll just call it 6 of 13. It is the Jack Jackson players. We call them the Forgotten. Avant and the Planet. This is a 65-cent stock and a 5-cent stock. These are the forgotten stocks. No one cares about them. Clearly, that's how you get down to 55 cents and 65 cents. And I'm looking at these stocks. It's actually fascinating. Avant's market cap, I think, today was around $15 million. And the company did nearly $9 million on revenue last quarter. Like, what? That's insane. But they're the forgotten. They might not be forgotten forever, but for right now they are. Avant reports record. This just came out recently. Reports record Q1 net revenue and outperforms revenue guidance. Gross revenue outperformance guidance. Achieved $8.9 million in gross revenues. Outperformed the guide of 8.2 to 8.7. Record net revenue increased 15%. International expansion. Global sales increased 21%. It doesn't really matter in the short term. They're the forgotten, but at some point it will matter. At some point, I don't know, maybe somebody's going to say this is kind of silly that these stocks are trading at these prices. We'll see. And then the Planet, I spoke about that extensively 9 days ago on the channel. I just spent $10,000 on a 70-cent stock. It was less than 70 cents, but I thought it was better for the title. But yeah, so if you want to watch that video, if you care more about the Planet, hear me talk in depth about that business model, you can check that out. Next one up here, number 7 of these 13 stocks is Honest. Honest Company. Missed turnaround. It's up 166% in the past 6 months. It's been amazing to see what they've pulled off there at Honest. Carla's got everything going the right direction. Revenue's up substantially year over year. Gross profit up substantially year over year. Operating income into the positive now. Net income positive. EPS positive. I mean, she's really pulling off a historic turnaround. It's absolutely incredible. Now, news came out recently that Jessica Alba is stepping down from the company. She still owns a lot of shares of Honest stock. And here's the deal, okay? Jessica Alba wasn't doing that much for Honest in terms of promotion recently. I noticed that. And I think it's honestly probably for the best. The company needs to stand on its own 2 feet. I think for too long, they try to count on her just for promotion rather than being what the game is. The game nowadays, you gotta leverage influencers on TikTok, on Instagram, on YouTube, on all these different social medias, and you can't just count on one person to run the whole thing. There's a lot of let's call it family influencers out there and vloggers and makeup folks that Honest needs to be leveraging in the influencer space and growing their business that way, and not just trying to hope Jessica Alba makes it all work. So if anything, it might actually be a long-term net positive to the company that Jessica Alba's kind of going her own way and she's going to focus on what she wants to focus on, and the company's going to go obviously their way, which Carla's doing a heck of a job. So really, really happy overall with that one. And yeah, I think, we're going to continue to see margin improvement, profitability improvement, revenue improvement. So I can't be anything but happy. Her Amazon ties are definitely coming in clutch as well. Stock number 18 of these 13 stocks is Cake. Cheesecake Factory. So Cake, stock's done a whole lot of nothing this year so far, down about 3%. A lot of the recent weakness has nothing to do with the business model. It's mainly, honestly, just, rates went up a bunch, and so a lot of stocks went down, especially stocks like Cake. Stock trades incredibly cheap, trading at a 10 forward PE. That's silly. That's flat out silly. I mean, when we think about Cake's growth, they still have growth in the Cheesecake brand. They're still growing locations there, right? Then you have North Italia and Flower Child, which those brands have growth for the next 10 to 20 years. 10 to 20 years of growth ahead for North Italia and Flower Child, right? They've put up amazing comps considering their competition have not been doing very good. Then they have all the other brands that have expansion opportunities over the coming years since they own Fox Restaurant Concepts. But, I mean, honestly, just with Flower Child and North Italia alone, the growth opportunities unlimited, really, for this company. And when I can get a growth opportunity that's unlimited, and I can get it at a forward P of 10, gimme. I like that. I like that opportunity, okay? So, yeah, really like Cake. Next one up here, number 9 of these 13 is, this one might surprise you, Zoom stock. Yes, ticker symbol ZM. Stock is down, this is incredible. Stock is down 7.7% in the past 5 years. Now, when you think about the biggest beneficiary in the world of Rona, I can't think of a bigger beneficiary than Zoom. Peloton was certainly up there, but I think Zoom was the most direct beneficiary of Rona, right? It became a household name basically overnight. And it's still a household name to this day, right? And yet, despite that, despite the growth in customers they had over the past 5 years and their revenue and the profits and the balance sheet and so many things going so great for the company, the stock's still down 7.7% in the past 5 years, which is one for the record books because you've never really seen that before. That's incredible. But here's the deal with Zoom, and here's what's attracted me. I might start a position very soon in this one. It's got a stable business model with some growth areas actually in their business model. It's got a grade A income statement. It's got a grade A balance sheet. It's got a cheap valuation on it. And so it looks like a very tasty stock with very low risk. So you might see me buy Zoom. I never thought I would see the day I'd buy Zoom stock, but that day might be coming very soon, folks. Very intrigued, very intrigued. Next one up here, number 10 of these 13 stocks is, you might like this one, Sofi. Sofi Technologies, a $7.13 stock here today. Stock's gotten hit very hard this year, down 26%. A lot of that is on the back of rates or rates going higher. There's a belief, obviously rates have kind of gone higher, not in terms of Fed funds rate, but other rates in general, right? And inflation's been sticky. It looks like Fed's not lowering, at least for months, right? And so that's, I think, weighed on regional banks. It's also letting, it's hurt companies like the Sofis of the world, right? But here's what's going on with Sofi's business model. Members, I call them customers, but they call them members, growing substantially. Products growing substantially. Galileo accounts growing substantially. As far as financial services, lending products, financial services products growing substantially. If we look at their quarterly performance, revenues, adjusted EBITDA, everything across the board, pretty much growing substantially for the company. So the numbers are great. And I spoke about Sofi in 7 Stocks I'm Buying April edition. So if you want to hear in-depth thoughts about Sofi, you can definitely check that out. But Sofi looks like a pretty dang attractive risk reward to me. And so Sofi, I believe, is a good buy. Next one up here, number 11 of these 13, is Palantir stock. This one's done me tremendous so far. It's up 138%. With that being said, I bought in a time period when the sentiment was about as bad as it could possibly get with Palantir. So the reason I've gotten such great gains is really because of when I bought the stock. So what I'll say about the stock is it's actually still a very attractive stock. And the reason being is, you look at the commercial business, that's got phenomenal growth. U.S. commercial was up as far as customers, 70%. And so U.S. commercial should have a runway of epic growth for years and years to go in the future. When you're the company that's at the cross-sections of data and artificial intelligence, and we're now moving in the artificial intelligence wave, man, are you well positioned, right? It looks like the government business, I would expect for the back half of this year to come in very strong. And so that bodes very well for the company. And then if we can get international woken up, especially on the commercial side, then we're really, really talking with this one. It's got a great balance sheet. Debt's non-existent. They're loaded with cash. So interest income is going to continue to pour in for this company. And so when I look at Palantir as a whole, man, is it set up very, very well. And we're at an infant stage of profitability. Sure, if you want to look at the forward P, you're like, oh man, forward P like 60 or whatever. The company just got to profitability. They're going to eat up EPS over the next 3 to 5 years. The EPS you're seeing in front of you right now is little money, little teeny money. Wait to see the earnings per share this company's producing 3 years from now, 5 years from now, 7 years from now. You're going to look back at these numbers and be like, that was funny back then. Okay, it's no different than when Tesla got to its infant stage of profitability. It's like nothing. And so that's where Palantir's at right now, and it's actually a very attractive stock still at this moment in time, right? And, here's the deal. If we start getting excitement around the NASDAQ again, around AI stocks, if Nvidia reports another good number, it's going to bubble all these stocks up, including a Palantir. And keep in mind, Palantir just had a major turn in the business model in terms of that U.S. commercial count. If that keeps rolling, and that's not just a one-off, more and more people are going to become believers of Palantir. And when I say more and more people, talking big money, talking Wall Street, because I'm telling you, they're going to love a Palantir. Wall Street's going to love a Palantir. It's perfect for them. It's kind of in that SaaS category. They love these sorts of business model. The margins will be incredible long-term for this company. It sets up very, very well. PayPal is number 12 of 13. I feel like I talk about PayPal so much the past 9 months or so. It's ridiculous. I mean, it's like having a baby. Alex Chriss is doing a very good job in his first couple quarters here with the company. I think he's going to continue to win Wall Street over. Revenue growth looks good. Profit growth looks good. Looks like they're leaning out the company to right size the company for the business moving forward. I got no complaints. I have no complaints with PayPal as of right now. Looks like innovation's going very well at the company. And so I don't have anything bad to say, just to be quite frank, about this one. And the stock's held up decent, considering the market's shown a lot of weakness with rates going up recently. I got nothing bad to say. If they keep coming through with the numbers, they put a guide out there that was, in my opinion, sandbag. We'll see if it's sandbag very shortly. And I wouldn't be surprised if they come in throughout the year and just beat numbers. And I wouldn't be surprised if by this time next year, Alex Chriss has fully won over Wall Street and they're jumping over themselves to buy the stock. We'll see how it plays out, though. Number 13 of these 13 stocks is Wynn Resorts. Wynn Resorts. Absolutely love this one. High-end gaming play. I spoke extensively about Wynn stock. 7 stocks on buying edition. I spoke about their New York opportunity in Hudson Yards, in Manhattan there. I spoke about that. And so, if you want to check out very in-depth thoughts about Wynn, Sofi, and some of those other stocks I talked about, check out that video there, okay? Because I definitely spoke extensively in that one. Appreciate y'all joining me as always. Thanks so much for being here, folks. If you're looking to join the wait list for 1000xstocks.com, you can go to the website, 1000xstocks.com. Join the wait list there. We're over 100 deep already at this point in time, and based upon it looks like we'll probably be 200 deep by the weekend, okay, as far as the wait list goes. Much love and have a great day.